Presented by Gundalow Advisors, Wealth Management. Welcome to Money School, Gundalow Advisors' online education service. We believe financial education is as important as financial advice. This is why we created Money School, an interactive program of financial insight and ideas designed to help you learn more about money and markets. In today's lesson, we're going to talk about saving. We're going to discuss saving versus investing. We're going to learn how to save and what things to consider. And we're going to take a look at how much you should save. Why should I save instead of invest? Well, first, saving is not investing. When you're saving, you're putting money in a safe place with the goal of not losing money. This is very different from investing. Investing carries a risk of loss. You can lose some or even all of your money when you invest. Secondly, saving provides you with a safety net. You can use that safety net when there's an emergency. When you save money in an FDIC-insured bank, up to $250,000 of savings are insured. And those savings are available to you at any time. Investing carries the distinct possibility of loss. And since you don't know when an emergency will strike, there's no guarantee an investment can be sold at a profit when trouble happens. Saving gives you emotional security. Too often, money mistakes happen when you're under stress. Having an adequate amount of savings gives you the psychological security necessary to avoid making bad money choices. For example, knowing you have adequate savings may give you the confidence to ride out the recession rather than selling stocks or selling your home in between jobs. How should I save? Where you save can make a big difference. Some savings accounts pay interest, and some interest is better than none. Checking accounts provide too much access, which may prompt you to spend down savings rather than wait for a rainy day. And checking accounts often don't pay you interest on your deposits, which means the bank is making money on your money, not you. Also, look for low or no fee options, and always compare annual percentage yield when choosing between more than two choices. Credit unions and community banks are good bets too. A local banker can make a big difference. Often they know the local markets better. And they may pay better rates on savings accounts and certificate of deposits too. Savings accounts and CDs may make sense for your situation. Consider putting a third of your money in a savings account and the remainder in a 3 or 6 month CD. The short-term CDs won't pay a lot of interest, but will often pay more than a savings account. Some CDs will have an option for a penalty-free withdrawal too. And since interest rates are more likely to rise than fall from their 2012 lows, rotating your CD every 3 or 6 months may make you more interest than locking up a multiple-year CD at today's low rates. How much should you save? In order to decide how much money you should have in savings, you'll need to know how much money you're spending every month first. Take your statements and add up how much money you've spent over the last 12 months. Divide that number by 12, and that will give you a ballpark of what you spend each month. Now, there is some debate about the right amount to have readily available in savings, but a bare minimum should be 1 month of that average spending. Since life struggles can often extend longer than a month, having 3 months may make more sense. If you have more than 3 months in savings, consider keeping additional money you have in savings in a 3 or 6 month CD rather than a low-yielding savings account. Finally, remember, interest earned on savings currently is less than the rate of inflation, or how fast prices climb every year. So, if you have significantly more than this already in savings, you may want to speak with your advisor about some other options. Did you find this lesson helpful? If so, make sure you check in every week for new Money School lessons. Do you want another set of eyes on your investments? Contact Gundalow Advisors at 603-742-7100 or info@gundalowadvisors.com.